seminars together for probably around 20 years or so now. It's
At
amazing
least.
how
Back
long
when
it's
you
been.
had we had some color in your hair besides white.
That's right. That's right. Back been doing this a while. So it's a lot of fun how Tom does this now that now that we can reach more people as opposed to when we started doing this 20 years ago, we were doing them in person. So I appreciate the opportunity again to visit with everybody about aviation insurance. Can't be Not normally the most funnest topic to talk about, but I love aviation and insurance happens to be my area of expertise as it relates to the aviation industry. Real quick background about myself is I tell people I'm just an out of work pilot. Used to be a corporate pilot, and then after 9/11, there weren't too many flying jobs available, so I transitioned to aviation insurance and been doing this for over 20 years now. I love educating the aviation public, if you will. I also write articles for the King Air magazine. So if you Google my name in King Air magazine, you'll see some articles I've written over the years. So today we're going to be talking about beyond hull and liability, must know insurance coverages for turbine aircraft owners. So our presentation today is geared towards the turbine aircraft owners and operators. We're looking at doing one in November for piston aircraft owners and operators. So here's our agenda for today. You guys can take a look at this and see the topics. It's not going to be death by a PowerPoint with 50 slides. We're going to have 8 slides to go over. And please interrupt me if you guys have questions. You can send something to the chat, and Marcella will ping me if I don't pick it up. But please interrupt me with your questions. And if it's a topic that we're going to hit on further down the road, I will say so. But otherwise, please ask questions as they come across your mind. What your policy may be missing. People don't realize this, but there are as many as 30 ancillary coverages within an aircraft policy for jets and turboprops. A lot of different coverages. So many people just focus on the whole value and the liability limit and what the premium is. Those 3 things. So what are some of those things that your policy could be missing? Well, they could be missing them, or they could be have very low liability limits. And I'll give a major one, and it's called extra expense. So extra expense is found in many of the turbine aircraft policies, but the wording can be vastly different. What is extra expense? Extra expense is the coverage that kicks in if you have physical damage to your aircraft. So if you have what they call an occurrence on your policy, which means you have property damage or bodily injury, your aircraft needs to be repaired, and that's going to be an insurable event. Well, you may have coverage under your policy called extra expense. And the extra expense will pay the difference, the delta between what it would normally cost to operate your aircraft and what the charter bill may be. So I'll give you a quick example. We had a customer with a Gulfstream, and they were in India. And when they were in India, the ground crew damaged the Gulfstream. We needed to get the passengers back to the United States, and their aircraft was unairworthy. So we ended up getting a chartered aircraft, and the charter bill was over $200,000 to get them back. And the insurance company paid for roughly 3/4 of that charter bill because the other fourth was the direct operating cost they would have incurred for the occupied hours. So there's just one example of if you don't have the coverage on there or the coverage set up correctly, you could be out of pocket $150,000 of your own dollars. Another thing you need to think about on your policy is we're seeing quite a few more operators do dry leases. And sometimes they don't think to let their insurance carrier know that they are going to be dry leasing their aircraft. Or maybe we have some people on the video call today that do not own an airplane, but they are dry leasing an aircraft. It is critical, crucial, very important that you have those dry leases recognized by the insurance carrier for a variety of reasons that we could do a whole nother presentation on. Another thing you want to make sure that you have filed on to your policy, if you will, is the hangar leases. And the policies, again, vary dramatically. You may have only $100,000 of, of coverage underneath your policy for damage to hangars and contents that you don't own. Or you may have $1 million, or you may have $10 million. But what does your hangar lease say? Or what do you think that you could be financially held accountable for if you were negligent and say started a fire within a hangar that damaged the hangar and the contents in there that you don't own? So you want to take a look at those hangar leases. Another thing too is leased and loaned engines. So if you have an aircraft and you are coming up on TBO, for example, on your aircraft, one of your engines, and you need to send that off to be overhauled, how does that affect your policy? If you take that engine off and you ship it out, once that aircraft engine is off, and if you were to replace it with a rental engine, that engine that you originally had is now a spare part. So do you have adequate spare parts coverage to cover that engine if it was damaged? And the leased engine is now part of your aircraft whole value. So if the hangar falls on your aircraft with that rental engine on there, do you have enough coverage to maybe pay off the loan that you have or replace that aircraft and pay the lessor that you lease the engine from? So those are very important items to be thinking about within your policy. So negotiable coverages. I love it. I put one bullet point under what you can and should ask for. So many people just think I need the whole value. Like I got a customer closing on a Falcon 2000 tomorrow. We're looking at a whole value of 16 million on the whole, and we're looking at 200 million on the liability. But I'm also looking at all these different ancillary coverages within the policy form to make sure they're going to meet our clients' needs from a contractual liability standpoint for the contracts we just mentioned, as well as their specific operation. So what are some of these coverages that you might want to be taking a look at? Well, medical coverage. Here's a good example of how it can vastly different. You could take an off-the-shelf aircraft hull and liability policy, and they may only have $10,000 of medical coverage under there. You can a lot of times get that up to 25,000, 50,000, 100,000, sometimes even 250,000 for no additional premium. Well, why is that important? Well, if you have a guest, a passenger, or potentially even a crew member, they get off the aircraft, they're just walking down the steps and they twist their ankle. That could be covered under the medical coverage, especially if you're using pilots that are not W-2, because W-2 pilots should be covered under workers' compensation. But if you're using contract crew 1099, you really want to take a look at your medical coverage, and you also want to take a look at your guest voluntary settlements coverage. Guest voluntary settlements, the definition is kind of in the name. You can voluntarily settle with that injured person as opposed to having them sue you. They'll sign a release saying they're not going to sue, and you can settle for up to a certain amount. Again, a vast difference in how much coverage you may have under your policy in the wording. The wording could include crew, could exclude crew, and there's some other variables that could go in there too. But from the amount standpoint, it could be as $100,000, 250,000, 500,000, or maybe even $1 million. Non-owned coverage too. If you're a corporation, a business, and you have a lot of employees, do you have a corporate travel policy? Do you have employees that may have a Cessna 182 and they're not telling you about it and they're using it for business? So you may have some known non-owned exposure, and you also may have some unknown non-owned exposure. So do you have that coverage under your policy, and what is the wording on that? For example, it may be very limiting on your policy, and it could say that you only have non-owned coverage for fixed wing turbine aircraft that are professionally flown. That could be very limiting, and it would not cover you if you had an employee out there operating a Cessna 182 on company business. We're going to get into diminution of value, constructive total loss later in the program here. But another thing you want to make sure you're taking a good look at too is your pilot warranty. That's where we see the bulk of insurance claims get denied, is around the pilot warranty. Either a pilot didn't have the required training within the last 12 months or 24 months, or maybe their medical had lapsed or something along those lines. So you want to keep an eye on your pilot warranty. Another is coverage territory. We'll get a little bit, I think we'll get a little bit more into this later around what carrier is right for you and your operation. But the coverage territory, it may be worldwide, but one carrier may not like the fact that if you have it based in, say, Panama, the country, as opposed to Scottsdale, Arizona. So carrier differences, not all policies are created equally. One of these days in my spare time when I retire, I'm going to take all the aircraft insurance policies and I'm going to read all of them. You know, they range between 60 pages and 100 pages amongst about a dozen different markets. And I'm going to compare and contrast to see the differences on the wording. To a certain degree, a good broker already does that. So we can get into the weeds on definitions. But, you know, one of the things you want to look at when you're choosing the carrier is the claim support. You know, do they have third party handling their claims? Do they have a claims adjusters in-house? And also what their reputation is with paying claims. Years ago, when an aviation market was starting up, a bunch of guys and gals came over from a household name to another company. And when they were having one of the first claims, it was on a P Baron. And I'll never forget this. It was my client on a P Baron. And the leading edge was damaged, and they were going to put a used boot, de-ice boot, on the leading edge. And my client said, I get my airplane's a little old, but my boots are in great shape. They look brand new, and I just had them replaced not too long ago. I don't want to use boot on there. So is the carrier willing to step up and put the new boot on there, or are they going to just do what they are obligated to do, which is put a used boot on there? Ultimately, the end of that story was the carrier was new, wanted a good reputation, and they put a new boot on there. But legally, they were not obligated to do so. Then I have carrier specific and underwriter specific on there. So underwriting companies have their underwriting guidelines, they have their appetite, they have their specific capacity and limits on what they're able to do. But also from an underwriter standpoint, it's still a very subjective business. And working with the right underwriter is also key at each one of those insurance companies.
Hey, Kyle, I think Marcella just got a question for you.
Okay. Let's see. Is it in the?
Yeah, I put it in the chat. I got it in a message. How should owners evaluate whole coverage values to avoid being under or overinsured? And they also had another question about how underwriters typically assess risk for turbine aircraft.
Well, this goes in. I'll answer the first question that's not posted there, or actually the second question about how do they underwrite the risk, right?
Mhm.
Well, this goes to more to the underwriter specific, the specific underwriter. You know, I think of one gentleman that I work with, and I've been working with him. We about the same age, so we got in the business at about the same time. And I know exactly what his specific appetite is. I know what the carrier allows him to do, but I know what his specific appetite is. And so with that in mind, he has clients that are my clients, and I'm sure with other brokers too, that will follow him. He was at a major insurance carrier for the first half of his career, and he left about 10 years ago, and the bulk of his clients followed him to the new insurance company. So in terms of what it is they're looking for, it's very subjective. There's some underwriters out there that they thrive on transition pilots. So if you're going to transition from a piston airplane to a turbine, or say a Baron to a King Air, or something along those lines, they really enjoy the transition pilots. And then we have some underwriters that are just very, very conservative, and they want pilots that have lots of make and model time, and they want to make sure they're going to simulator-based training, make and model every 12 months, and they're going to give you the best rates the market will allow. So it's kind of a non-answer. My apologies for that, but it really is. It's very subjective, and it's all about what the underwriter, that specific underwriter, that specific carrier's appetite is. But the best thing you can do if you're an owner pilot is don't be happy with a private pilot's license. Get a commercial license. Don't be happy with a commercial license. Get an ATP. You know, always be expanding and showing that you're going above and beyond to be safe the safest pilot and most knowledgeable pilot you possibly can be. Would be my advice there. How should owners evaluate whole coverage values to avoid being under or overinsured? This is an excellent question. I mentioned the Falcon 2000 a few minutes ago. So they're paying one price for it. It's going to be down for about 90 days, getting a lot of work done. They're going to spend another $1.5 million for it. And so we were talking about this. They said, well, what should we insure it for? And I said, well, once it's all said and done and the hanger falls on it and turns it into a pancake, how much money do you need to go out and replace it with like, kind, and quality in today's market? And they said, oh, easy, about 16 million bucks. And I said, there you go. Then that's what we should insure it for. If the values of the aircraft go down next year, then we need to take a look at that. Maybe we lower the whole value. If it appreciates, then maybe we need to increase the whole value. You always want to insure for what it costs to replace it with like, kind, and quality in today's market, because the aircraft policies 99 times out of 100 are an agreed value, meaning what you insure it for is what they're going to pay you for it. If you underinsure the aircraft and it gets damaged, the insurance company is going to look at the policy and I go, oh my gosh, this guy is way underinsuring the aircraft. We're going to write him a check and we're going to take the airplane from him. That's what we're going to do. We're going to total the aircraft, and then we're going to turn around and we're going to sell the aircraft as salvage, and we're going to get most of our money back. Or if it's overinsured, they're going to say, yeah, I know you want us to total the airplane, but we can fix it, and we're better off fixing it as opposed to totaling it and selling the salvage. And that leads me into constructive total loss, which we'll get into a couple slides later. Exclusions that can cost you millions. So there's several exclusions in your policy. You can read them all. If you pull up your policy, you'll look in there. You can read what's excluded. One of them is heat. One of them is wear and tear. Another one is freezing. Another one is pollution. Those are just several of them that you want to review. So I'll give you an example on the heat, excessive heat. That's where you may have a hot start. If you have a hot start, every single aircraft insurance policy out there has an exclusion for heat. There has been known from time to time, one specific market, I believe, has been known to allow you to buy that coverage back, that exclusion back. It's very expensive, but there's one market out there, I think, that will do it, and they're traditionally not the most affordable market. So most people do not work with them, but ask your broker if you want to look at trying to buy that excessive heat back. Another one is wear and tear, and this will also lead me into pollution. So say you have an aircraft and you have it in the hangar and you walk away, everything looks great. You come back the next morning and you notice it smells like jet fuel. There's jet fuel all over the hangar. The jet fuel has gone down the drain. And you go, what in the world happened? And then you go over and you look at one of the fuel sumps. The fuel sump had deteriorated, had maybe dry rotted out, and it had failed overnight, and fuel started seeping out of there. That's a situation that could be excluded, and the pollution is excluded because it's not a covered claim. What pollution coverage would be covered is, say you landed and you landed long and you went out the end of the runway, sheared the gear off, punctured the fuel tanks, and fuel's going everywhere. That pollution situation would be covered because it's a covered occurrence. There's physical damage that was done to the aircraft. So that's where the wear and tear situation would come in from an exclusion standpoint, and also the pollution. Another one is the freezing situation. So I was visiting with a customer down in Western Texas last month, and we were talking about claims and things of that nature. He said, yeah, Kyle, before I met you, I had a situation. We had one of the jets, and out here in Western Texas, sometimes it can get below freezing, and the lavatory wasn't drained. The water in the system was not drained, and it froze overnight, and the pipes broke and caused all sorts of damage. Well, a situation like that, there's a good chance that would be excluded too. Now, some of these coverages, these exclusions, you can't buy them back. This is just more of an FYI of what is covered and what is not covered. The pollution standpoint, you could buy a separate pollution policy if you'd like. And I'll be honest with you, 99 out of 100 people, I think, do not buy the pollution coverage. All right, diminution of value. So here's diminution of value. We see people suing for diminution of value over the decades. Sometimes they're able to get the money and sometimes they're not. But from a first party standpoint, meaning your aircraft was damaged and now you want to seek diminution of value from your insurance company, that is specifically excluded within the policy. Now, if an FBO damages your aircraft and you sue them, there's a chance that you could get diminution of value from them, being indemnified for that. Some aircraft insurance policies will allow you to buy diminution of value coverage. Well, so what is diminution of value? Well, it's very prevalent on new aircraft. So say you take a delivery of a brand new Phenom 300, for example, and the FBO damages it. Maybe it's the notorious Signature FBO that has one of those bulletproof contracts that says if they damage your airplane, they're not responsible for it. So your aircraft gets damaged, you get it fixed, but now you have damage history in your logbooks. Well, one could argue that your aircraft is not worth as much as another aircraft that does not have damage history if it was to be on the market and for sale. So there's a formula for diminution of value with the policies, and you can pay some extra premium and get that back. Again, it's not cheap, but it can be available with some insurance companies. A lot of brokers do not offer that. Would be my recommendation that if you're interested in that, especially if they have a newer aircraft, that you look into what diminution of value might cost. Constructive total loss. One of the things I did not mention at the start of this presentation is that after about 4 or 5 years of a hard market, meaning coverages were being pulled back in and pricing was going up, we are now in a state of a market where coverages are being more negotiable, which is part of the reason for this conversation today. And the premiums are coming down, also known as a buyer's market. Well, with the buyer's market here, one of the additional coverages you might be able to negotiate in your policy is constructive total loss. So constructive total loss means that the insurance company agrees to what that number could look like. Is it 70%? Is it 80%? Is it 90%? But instead of having the traditional formula to decide if your airplane is going to be total or not, which is the salvage value as the aircraft sits, plus the cost to repair it, has to meet or exceed the insured value, the constructive total loss endorsement has a percentage in there. And say it's 70%. So if you have a $10 million aircraft and you have a 70% constructive total loss endorsement on there, that means that the salvage value plus the cost to repair only needs to exceed 70% of the insured value. And then they will take the salvage and they will write you a check for 100% of the agreed value on the policy. And time and time again over the years, I've seen customers take delivery of brand new aircraft, and then their brand new aircraft gets damaged, and then they look at the video on the ramp and saw how it was damaged, and they say, no way am I getting back in that airplane. I don't care how you fix it. I do not want that airplane back. I saw that happen early on in my career. I was a large grocery chain operator, took delivery of a brand new Citation, flew it from the Midwest to the desert Southwest, and something happened where the aircraft ended up rolling across the tarmac and had so much momentum that it was wedged on top of a larger jet, on top of or below. I mean, the pictures were ugly. And the CEO saw that and he said, no, I want a new airplane. I'm never getting on that airplane again. So that's where a constructive total loss could come in to support it. All right, best practices for coverage review. Again, everyone focuses on price. I was talking to a person the other day and we were going over some of these coverages and he goes, Kyle, I've been managing airplanes for 30 years. I've never had a conversation with this much detail. Why do you think that is? And I said, well, it's probably your fault. And he goes, my fault? How's it my fault? And I said, because so many people just strictly focus on price that my peer group, my competitors, if you will, I have been conditioned to feel like when somebody calls them up and wants an insurance proposal, they are looking for the cheapest price. That's what they're looking for. Um, I remember years ago, I had a customer on, I think it was on a Legacy 500 maybe. And he left me over $2,000 in premium. My premium is 63,000. He went to another broker that got him a quote for 61,000. And I said, I don't understand what are we doing here? And he goes, well, I found a cheaper price. And I said, well, we went over this last year during our marketing efforts. There were cheaper prices, but the coverages weren't nearly as robust as what you have. And he did send me the proposal, and I was blown away. He switched his policy to save $2,000, and under the extra expense category, it was going to be capped at $5,000 per day, and he only had coverage for 30 days. And I had negotiated coverage much more robust than that. So if that guy has a claim on that Legacy 500, it could be a simple bird strike. He is going to be out hundreds of thousands of dollars for as much as he flies that aircraft from a charter standpoint. So,
Hey, Kyle, I have a question from social media. They said, for those of us flying primarily for business, what coverages would you prioritize first?
extra expense. If you're flying for business, that means you need to be there. And that means that if your aircraft gets damaged, you need supplemental lift. So the number one thing I would focus on if it's for business use would be extra expense. Another item, if you're traveling internationally, would be a trip interruption. That's one coverage we didn't talk about, but since this uh, participant brought it up, I'll talk about it. If you are in a country and you need to get permits to get a charter flight in there and your aircraft is damaged, you may not be able to get a chartered aircraft in there, get permitted for 3 days, 5 days, or 7 days. And when you're ready to come home, you're ready to come home. So what the trip interruption coverage will do is it'll pay for your incidentals if you have to stay an extra night in a hotel, and it'll also pay for your last minute one-way airline tickets out of that country to get to a country to where a chartered aircraft can pick you up. And that can be very expensive, especially if you don't want to fly coach. So those are the two coverages.
Thank you.
My pleasure. So everyone focuses on price. I would make the conversation about what your business exposures are, your operating exposures are for your flight department, and then have that conversation with your broker. This is what we're doing with the aircraft. This is how much we're operating the aircraft. This is where we're going to. We have employed pilots. We have contract pilots. We own our hangar. We lease our hangar. There's so many different variables that go into it. Every operation is different. You guys are not all the same. Then once you know what it is you want, then you can focus on price once you know what you need, what you want. The analogy I like to use is you didn't buy the cheapest airplane out there, did you? You bought the airplane that meets your needs. That's what you bought. And then you focused on the best value. I would encourage you to look at your insurance program the same way. Don't take an off-the-shelf policy that's the cheapest. Customize your policy for what it is you need. Ask for a list of ancillary coverages amongst the quotes. So if you do have a broker that's going to compare and contrast the different quotes for you, have them spreadsheet the ancillary coverages because you may be unlike that gentleman I talked about, the Legacy. You may be willing to pay an extra $2,000 to have robust coverages. And I know I've hit on it, but I got to read it, right? Discuss your operation with your broker to tailor the policy to you. Those are the takeaways. So we actually got done faster than I was anticipating. So we got plenty of time for some questions, comments. And I think I have some colleagues on here that have joined. So if one of my colleagues thinks that I have missed the mark on something, please throw something in there on the Teams chat. I'll be happy to discuss it.
And for those of you that are on the Zoom call, just take a picture of your screen and you'll get all of Kyle's contact information.
I was curious, Kyle, how often do you recommend an owner review or update their insurance policy?
Every year. Every year you need to take a look at what you have. Especially right now, the market is softening, which means it's a buyer's market. We have had some new participants, some new carriers come into the market. But also when a new carrier comes into the market, yeah, they may come in with the lowest price and maybe the most robust coverages, but also take a look at their financial ratings. Because aviation, especially for those on the video here that maybe buying higher liability limits. If you have higher liability limits, you want to make sure that the new carrier that you sign up with has the capacity to fulfill that obligation if you get sued for a big number. Also, anytime you're switching aircraft. So again, I mentioned top of mind because it's closing on it tomorrow. That Falcon 2000, they're coming from, I think it's a $50 million Hawker to a $16 million Falcon. So when that happens, you need to look at some of the ancillary coverages too, because you're going to be able to get better ancillary coverages with that type of aircraft.
Bryant is curious if you also advise on MROs.
Yes, absolutely. Obviously, this isn't tailored around that, but yeah, MROs. There's a lot of different ancillary coverages that go into the MROs too that people don't think about. Again, most of them are just looking at, okay, am I on airport? Am I off airport? And they're looking at the overall liability limit, but there's some exclusions in there that you may be able to get bought back. I'll give you one example. There's some free consulting for you. It's called Your Work, Your Product. The off-the-shelf policy is going to have an exclusion in there. So if you damage a part or the aircraft that you're working on and you don't have that exclusion removed, you may not have the coverage you think you have.
And we have another question. If you could speak about coverage for airplanes based in California, they understand our market is different. This is from Ella.
Yep, you're right. The market is different. So we actually have some aviation carriers that cannot write business. They have chosen not to go through the process of getting approved to write in California for one reason or another. If you have your aircraft registered in another state, based in another state, or you have another address, sometimes there are legal workarounds for that. Don't hide anything from your broker. Be open and transparent with them. But sometimes there are solutions to get with a carrier if you have exposures outside of the state of California to have your policy written by a carrier not running business in California. What other questions do we have?
I think they said, is having an admitted carrier important?
Yes, it is. Having an admitted, and that's a great question. A lot of people don't think about that. So you have admitted carriers and you have surplus lines carriers. And so an admitted carrier means they have been approved in that state. Their policy form has been approved in that state. And if they were to become insolvent and you have a claim, the state will step in to help with that solvency issue. Whereas if it is surplus lines, that may not be the case. So whenever we place a client with a market whenever we place a client with in a market that is not admitted, we first make sure that there are no solutions with admitted paper. Part of our company's compliance standards. We have to make sure we tried to put you with an admitted market. And then if we do a surplus lines placement, there's additional taxes that are due on that surplus lines placement as well. Brittany, I know you're on here. I know you play some of our clients in the surplus lines market more than I do. Am I missing any mark on that you want to add on to that?
Sure. Yeah, there are times where it makes the most sense to place the coverage with a non-admitted carrier. If typically for the type of risk that Kyle has been speaking about today, that's not typically the type of risk where it makes sense. But there are times like, that Bryant, you had asked about MROs, large MROs that are having to go quota share. You're placing a portion of the risk with a non-admitted market, typically, not the entire 100% of the risk. And there's ancillary coverage lines outside of the aircraft hull and liability where the only option is a non-admitted carrier. So not always a bad thing, can be a good thing, just understanding when it makes sense to do it, when it makes sense to go with an admitted carrier, and the pros and cons of each.
Excellent. Thank you, Brittany. Any other questions come in?
So this heavy silence indicates to me that everyone has well, here's finally have a question. I was gonna get ready to end it.
Yeah. The most coverage I've been offered lately is 1 million, not smooth, which isn't enough coverage. So there's so many variables that go into how much liability coverage you can get. And to your point, if you can't get 1 million smooth, meaning no sublimits, that means we cannot get you excess coverage on top of that. One strategy, though, and again, I don't know any of the details about what you have going on, but one of the strategies is what Brittany hinted at about the MRO comment about quota share. So if we have clients that need higher liability limits, let's say they're operating single pilot, and the most our market will offer them is say $10 million. Well, we can do a quota share placement, meaning we have one market that leads it. They take a percentage of the risk, and then we have other markets that will follow the risk until we have 100% of it built out. So if a market is only willing to take on $10 million and the client wants $50 million, we may need to find 5 markets that will each take 20% of that 50 million to get us there. So if you are only able to get $1 million coverage, ask your broker about doing a quota share placement so you can spread that risk out amongst multiple carriers to get the limit you're looking for.
There are no more questions on our end on social media.
Okay. Well, I appreciate the opportunity to talk about aviation insurance and educate the community here. Looking forward to being invited back again soon. And thank you for everybody for joining.
And refer a bit of information. Kyle is going to come back in November and talk about piston aircraft, if you're interested in that. So we're trying to help you guys with all the free information that we can. So stay connected to Marcella and she'll let you know. I think we're done.
Perfect.
Good.
Thanks, everybody.
Thank you.